Ladies and gentlemen, this is Professor Banks with the walkthrough of the Practice 1 problems for Chapter 1. This is the screen that you should come to when you first click on the assignment, and you're just going to press continue. And you will find here the first of what I believe are five short problems, and you could see the one of five down here at the bottom. Hopefully it looks a little shaded on my screen just for the parameters that I have set here. But in this problem, it's asking you to prepare an income statement. Remember again, whenever you see a request for a financial statement or other, you want to think about what actually is involved in the calculation of income or net income as it is. And that's going to be revenues minus expenses equals net income. So revenues and expenses are the only items that should appear on an income statement. Income statements will always start with sales or revenue of some kind. In this case, it is service revenue, as we see here. And that is worth $9,300. I believe that's the only revenue. You could have more than one. Typically in the first chapter, they only give you one, but just to verify there. Then we're going to go to our expenses, and we only want to record expenses. Typically, expenses will, as I often say, have the last name, expense. There are a couple that we will find, we'll get into later, I believe in chapter 5. One of the major expenses doesn't have expense in the name, but for the most part, you're looking for every time you see something that has expense in the name. What we see here are salaries expense, utilities expense, and that appears to be it. So we're going to drop those in here. And you can either start typing and it will pop up. Salaries expense for $2,200 and utilities for $1,200. And it looks like I didn't type that one in properly, so click back on that one again. And notice what's happening here. Because I'm getting ready to create a list of things that will tally to this total expenses here, it moves over one column to the left and starts itemizing those things and brings the total of it back to the right side of this document. So what we end up with is everything involved in that calculation is going to be in this far right column. We find revenues minus total expenses, and that will give us our net income. Drop down net income here. Come on now. Oh, why does it not want to work? I'm going to put the amount in and see if it'll let me go back. The difference between 9,300 and 3,400 is 5,900. And this should let me record net income. Okay. Maybe it was below my line and I just wasn't seeing it. Oh, there it is. Okay, so we find the net income there. So what we're looking at is the completed income statement. Again, just revenues minus expenses gives me the income. This is a very, very simple income statement. They will be much longer than this by the time we get to the end of the course here. But just for the most part, it's underscoring the fact that net income is equal to revenues minus expenses. Let's move on to the second question. This one is asking us to prepare the statement of stockholders' equity. This is a financial statement that gives you a breakdown of the different, you'll find this out a few chapters from now. You'll see more than just common stock here, but just very basically, your stockholders' equity statement is going to list everything that's involved in the calculation of the amount that the owners of the company, which are the stockholders, how much of the company do they actually own as compared to how much debt do they have? Because when you look at that basic accounting equation that says assets equal liabilities plus stockholders' equity, all of the assets or all of the resources in that company are either owned by the owners or by the creditors, meaning that you took out loans to finance a portion of the business. So we're just focused on that stockholders' equity piece here and trying to give a breakdown of what makes up that stockholders' equity number. It's either the common stock, which is the amount of money that investors have actually given to the company, or it is retained earnings. And you'll often hear me say this phrase throughout the semester that in accounting, we call it like we see it. So when you look at the name of an account or the name of some document that we have there, think about what the words say, and that will tell you what's going on there. So when we look at an account that's called retained earnings, we're talking about all the earnings, all of the net incomes that we have had since the time this company was formed. All of those earnings added together minus any monies that we have given back to the owners by way of dividends. So this retained earnings is an accumulation of all the earnings minus dividends over the life of the company. So we add those two together, and that tells us the total amount that the owners have as an investment in the company. We're going to start with the beginning balance as far as our rows are concerned. A beginning balance, we will add in the latest net income. We will also add in any new stock additions. In other words, if we have issued any new stock, that amount would be added as well. And then we would subtract any dividends that we have paid. And so we see here issuance of common stock, add net income. Now, if by chance the company had a net loss, meaning they lost money for the year, then what we would have instead of add net income is minus net loss. And that's what we would have here. But in this case, it tells us they had net income of 8,500. So we don't want to go there. Not to say that one of the problems won't take you there. Add net income, and we're going to subtract the dividends. This is what's basically happening to update the statement of stockholders' equity. I'm starting with the beginning balance. I'm going to add the new issuance of common stock, add the net income, and subtract any dividends that we paid out. That gives me an ending balance that shows how much of the company the stockholders actually own. My beginning balance at the beginning of the year, they had $11,000 in common stock. Let's drop that number in. Retained earnings, we had $8,200. We add them together, we're looking at $19,200. How much common stock did we issue? During the year, they issued an additional $8,000. That's going to go in the common stock column only. And we have to be sure to bring that total over to the total column. For net income would always be added to the retained earnings. Remember that income is another word for earnings. So we're going to add in that 8,500 here and be sure to bring the total over. And then our dividends would always, always, always be subtracted from the retained earnings column. So this is minus 3,200 and minus 3,200 here as well. And so then for the ending balance, we need to add up all of the items in each one of the columns and then make sure that they match going horizontally and vertically as they come together in this corner box here. So we are looking at 1,900 here. And we have 85 plus, well, 82, I should say, plus 85 minus 32. We have 13,500 here. Let me make sure I did that right. I'm trunking numbers. $13,500. Okay, so 13,500 plus 19,000 gives us $32,500. That is our total stockholders' equity. But what we want to do is make sure that coming down this column, we end up with the same number. So 19,200 plus 8,000 plus 8,500 minus 3,200 gives me $32,500. So they add up coming down and coming across to the same 32,500. So what we're saying is out of all of the resources that the company owns, all of that total assets, 32,500 of them are owned by the owners, and anything else, the difference between the assets and this number has to equal the amount of debt or liabilities that the company has. And you can always and should always, when you are done with a question, click this check my work box just to make sure that everything is green. Green is not only is everything green, but you want to make sure that the wording in this box says the answer is complete and correct. So let's move on to the next one. Now we want to prepare the balance sheet. The balance sheet is that picture of what the company looks like on this particular day. When we looked at the income statement, the statement of stockholders' equity, and then as we'll get into later, the cash flow statement, all of those are like videos, if you will, that show what happened in the company from the beginning of the period until the end of the period, whether or not it's a month, a quarter, or a year. Um, it's showing what happened. How did things change over the course of that time period? Where the balance sheet is concerned, it's not a video. It is a stagnant report that shows this is what the company looked like on this particular day. So I always relate the balance sheet. If the others are like a video, this one is just like a snapshot, just a picture, a still picture of what the company looked like on this day only. December 30th, it would have looked different. And January 1st, it could look different as well. So only on this day did it have these particular numbers. So we're going to list all of our assets on the left side, and then the liabilities and stockholders' equity on the right-hand side. The key to the balance sheet is remembering that the total amount of the assets have to equal the total amount of liabilities plus stockholders' equity. What's happening here is I'm just saying that out of everything that I owned, who really owns them? How much do our creditors own if we have to liquidate the company or we go bankrupt? And then how much do the actual stockholders or owners of the company own out of this company total? So, where the assets are concerned, we tend to list them what we call in order of liquidity. How quickly are they turned to cash? So, our first asset listed is always going to be cash because it is the most liquid. Our cash amount in this case is $6,000. Then we go and look through this list. One of the other really liquid assets tends to be accounts receivable. However, I don't see any here. Let's first of all look at what assets we have. We have equipment, we have land, and we have cash. Just those three. Out of equipment and land, equipment would be used up or converted to cash quicker. And that equipment is worth $26,000. And the land is $18,000. So this added the total assets together for you. We end up with $50,000 here. When we're done with the liabilities plus stockholders' equity, they also have to equal $50,000 or this balance sheet is not correct. So let's look at liabilities. Most of your liabilities are going to have the last name payable. They will typically have payable in the name, and accounts payable is the one that is almost always listed first because, again, we're listing them in typically in order of what we call current liabilities first, the ones that we have to pay within a year. Accounts payables are the ones that typically have to be paid off the soonest. So this is the reason why we list this one first, and that is worth $3,000. Any other payables that we see here, we have a note payable for $20,000. So we have 23,000 in total liabilities, and I just know from knowing that the total has to be 50,000 here that we're looking for $27,000 worth of stockholders' equity. So let's look at what we have here. We've already used equipment, payables, expenses not necessary here. That doesn't belong on a balance sheet. Common stock, let's see, $11,000. That's one of our items. And don't be fooled by them giving you more than you need here. Know that when it comes to a balance sheet, you only want to list assets, liabilities, and stockholder equity accounts. You have on here revenues and expenses, but those don't belong on a balance sheet. They belong on an income statement. So we're going to ignore those here. So the common stock is $11,000. The other thing we need is retained earnings. Oh, but that's a question mark. We have to figure out what retained earnings are. Let's drop in the title anyway. Okay. So right now I'm up to $34,000 when I consider the liabilities and this $11,000 in common stock. What is necessary to get me to the 50,000 because I know this number has to be $50,000. So what I want here is $16,000 for retained earnings. That gives me the $50,000 for total assets and total stock liabilities plus stockholders equity. Let's check and see if we have it right. And we are complete and correct. Now, I will note here that if you're going through and doing your homework and you click on this button and it says correct but not complete, one of the main things you want to check in some of those problems is to ensure that you actually have a label for every number. Every number on any financial statement needs to have a label beside it to tell you what it is. And sometimes students will get busy crunching the numbers and dropping in the numbers, and especially where the totals are concerned. In this case, they automatically drop in the labels for you for the totals. But if you get into some of the problems in the future and you get that message that it's correct but not entirely complete, chances are you missed putting a label in somewhere. So let that be the first thing that you check. Okay, so let's move on to question 4. Okay, this one has us filling in formulas and missing blanks. Whenever you see a problem like this, what you're really looking to do is to write down your formulas and have them handy. Because this is what it's all about, making sure that you understand the relationship between the numbers represented by these different accounting terms. So when we talk about net income equals revenues minus expenses, write that down. Assets have to equal liabilities plus stockholders' equity. Write that down. Understand, well, why don't we just go through it first? Okay, so the first one here says revenues are 27,000, expenses are 18,000. So the formula that we need is revenues minus expenses equals net income. And we have revenues here of 27,000. And this is, don't forget this little box. This is another one that if you see that it's correct but not entirely complete, chances are it's one of these. So revenues minus expenses. Oops. Oh, I'm trying to write in the word, sorry. Expenses 18,000. Oh, come on. Click the button. And we see the difference there between the 27 and 18 gives us $9,000. The next formula we need, the increase in stockholders' equity equals $17,000. The issuance of common stock is $11,000. The net income is $12,000. The dividends are equal to what? That's our unknown here. So the formula that we need for this one is that the change in stockholders' equity is equal to the issuance of common stock plus the net income minus the dividends. That's the formula we know has to happen here. So the issuance of common stock is $11,000. Oops, nope, I don't want that there. This is actually $17,000 here for the actual change that they give you. The common stock is $11,000. And this is plus my net income. Net income is $12,000. And this is minus dividends. And dividends are, and this is what we have to figure out. So I know that the $17,000 is my total, it's on the left side of the equal sign. This other side of the equal sign has to also equal 17,000. So far I have 11 plus 12, which is 23. So what I need to know is what do I need to subtract from the 23 to get to 17? So the 23, I'm just basically saying 23 minus 17. So this has to be minus $6,000. So 11 plus 12 is 23, minus 6 is equal to 17. This is how we're calculating this. The next problem says assets equal 24,000, stockholders' equity equals 15,000. What are my liabilities? So we need the formula that says assets equal liabilities plus stockholders' equity. What are my total assets here? $24,000. And that is equal to liabilities that I don't know plus stockholders' equity that I do know of 15,000. And the liabilities in this case have to be what? $9,000? Because 9,000 plus 15,000 is equal to 24. Or another way to do that is 24 minus the 15 equals 9. And then finally, total change in cash. We had $26,000 as my beginning cash balance, and this really deals with the statement of cash flows. The change in cash is going to be equal to net operating cash flows plus net investing cash flows plus the net financing cash flows. But in this case, we do have a negative here. So that's going to be the net amount used for investing. But nonetheless, if I look at it, it's still this plus this plus this. This happens to be a minus, so it's plus a negative. So what are we looking for here? Formula-wise, operating cash flows is equal to the total change in cash plus the investing cash flows. No, I want the total change in cash equals to my operating cash flows plus investing cash flows plus financing cash flows. This total change is equal to 26,000. And then I want my operating cash flows, which is 34,000, plus my investing cash flows, which is a minus here. So I want to, well, they won't let me change that. So I'm just going to put this in as a negative number, minus 17,000. And the last one I have to figure out there. So the total has to be 26,000. On the left, that's what the number is. Let's see what I'm up to on the right-hand side. I have 34,000 minus 17,000, so I'm at 17,000 already. What does it take to get to 26,000 on this side? So I'm just going to say 26,000 minus that 17,000. So I'm looking at $9,000 here as a positive. So 34 minus 17 plus 9 is equal to 26. Let's check our work. I already know there's a problem here. I see all this green, but it tells me my answer is not complete. Remember what I told you at the beginning, that with problems like this, you have to make sure that you check these boxes in between them to make sure that you're telling the operation that needs to be performed. Equals, minus, plus, that kind of thing. And I knew I did not do this one. So I want to return to the question and go fix this one. So assets equal liabilities plus stockholders' equity. This should be a plus sign here. Let me go back and check my work. I am complete and correct. And I can move on to question 5. So this is a longer problem that actually has us preparing three of the 4 financial statements, the income statement, the statement of stockholders' equity, and the balance sheet in that order because they have to be prepared in that order. So it's giving us some practice actually preparing those statements, but not only that, is showing us the relationship between those statements. They have to be prepared in that order because there is information on the income statement that I need before I can prepare the statement of stockholders' equity. And then there's information from the statement of stockholders' equity that I need to prepare the balance sheet. So we're going to take a look at preparing this first one here. The income statement. What goes on the income statement again? Revenues minus expenses. That's it. So you see a lot of items up here. The only thing I'm looking for are revenues and expenses. Now, I will tell you this, the one thing that most of us don't like about doing the work on online like this on the computer versus on paper is having to scroll up and down. A lot of times what students will do is just use their cell phone and take a picture of this information so that they can stay in this mode right here and not have to do all this scrolling up and down. So that's exactly what I'm going to do here. So I'll take a picture. And that way I can just stay in this area without all this back and forth. So I want revenues, and in this case, the revenues are, let's see, service revenue recognized during the year. Just wanted to make sure what they call it in this case. Service revenue is equal to $37,000. And I am going to scroll up just to show you where it is. Oops. It keeps trying to give me more information than I want. So here we go. Service revenue recognized during the year of $37,000. Let me make sure there are no other revenue items here. Since I had so much trouble finding that one, I figured there wouldn't be. And then we're going to move to the expenses. I see here rent expense, utilities expense, salaries expense, insurance expense. Dividends are not an expense, just so that you know. For now, you're looking for things that have expense actually in the account name. So rent expense is one. Let's drop that in. Rent expense, and that is $7,000. And you don't want to put that in as a negative, even though you're going to subtract it. You just list them all. You'll get total expenses. And because we know that it's revenues minus expenses, that's just something that is known there. I think it will actually allow you to put the negatives in if you choose to, but it's actually not required. So rent expense, the next thing we have listed is utilities expense, and utilities are $4,900. Then I move down to salaries expense. Salaries expense is $13,300. And then finally, insurance expense. And insurance expense is $3,500. So I have a total of $28,700 in expenses. I'm going to take $37,000 minus $28,700, and that is still positive, so it is a net income, and the amount is $8,300. Again, I want to check it before I move on. And I would always suggest checking it before you move to the next one. Where we're talking about the practice problems, you have an unlimited number of checks, so don't hesitate to make sure that you get it right. Because if you don't have this right, you're going to end up getting the next part wrong because you're going to use this net income in the next calculation. Okay, and it's saying answer is not complete, and that's because you haven't completed requirements 2 and 3. But as far as this is concerned, the main thing I want to know is that this net income number is right, because this is the number I'm going to use in the next requirement. And that is the statement of stockholders' equity. So the beginning balance for my statement of stockholders' equity, I'm going back to the top here, and I see my common stock issued prior to this year was $16,000. So that is my beginning balance. I wanted to highlight that word there. Oh, I need to return to the question. I'm still in that check mode from when we checked our work from the previous question there. Okay, get back to my numbers here. I let my camera screen go out. So my beginning balance again was $16,000. The retained earnings beginning balance was $7,300, and that's given to us here. So my total stockholders' equity at the beginning of the year is $23,300. The next thing I want is to look to see if there was any stock issued. So cash. I don't see any new stock issues. So this is going to be issuance of common stock. That's going to be zero. The next thing I'm looking for is adding the net income because I know I had net income. That's a number that you will not find up here. Remember, we just calculated that. We want to go back to requirement one and grab the 8,300. And we bring the 8,300 over here as well. And this is going to be zero here. And then finally, we subtract our dividends, and they tell us here that dividends paid during the year were $3,200. We are going to subtract that under this retained earnings column. Okay, so 16,000 here. Let's see. We have 7,300 plus 8,300 equals 15,600 minus 3,200 in dividends, and I have $12,400 in for my ending balance. 12,400 plus $16,000. Oh. $28,400. And I want to make sure that these numbers also add down to that amount. 23,300 plus 8,300 equals 31,600 minus 3,200. And I have $28,400. Now, I need some of this information because this entire bottom line is what's going to be my stockholders' equity section of my balance sheet. So I want to make sure that it's right before I move on. Let's check our work. Okay. Again, I get the not complete, and that again is because I haven't done requirement 3 yet. But I'm mainly looking at making sure these numbers are right so I don't carry the wrong numbers over. Return to my question. Click on requirement 3. I keep wanting to say retirement. Okay, now I want to list all my assets, then my liabilities plus stockholders' equity, remembering again that the assets have to equal the total liabilities plus stockholders' equity. Because we just mentioned it, I'm going to go ahead and do this now. The common stock and the retained earnings, again, are not something you're going to find up here. We have to go back to requirement 2 and grab these numbers: 16,000, 12,400, and 28,400. And the 28,400 automatically calculates for us. So let's go here and look at what we have. It looks like we have about 4, if the highlighting is any indication, 4 rows here for assets. Let's see what we have. Cash remaining is $4,800. So my cash balance, cash is always the first asset listed, was $4,800. The rent expense, that went on the income statement. I don't need to use that now. Land that has been purchased is worth $21,000. I want to see if there are any other assets first before I drop in the land. Retained earnings, we use that in the statement of stockholders' equity. Utilities expense, we used on the income statement. Accounts receivable, that's another asset. Accounts receivable, again, is that account that holds the total amount that all of your customers owe you for things that you allowed them to buy on credit. So it's a list of all your IOUs with the amounts. So these are very liquid assets because typically accounts receivable are going to be collected from your customers within 30 to 45 days. So $7,200 for accounts receivable. Let's see what's next. Revenues, no. Expenses, no. Payables is going to go on this side. And that accounts payable number is 2,200. See what else we have here. Dividends paid. We don't need that right here. Common stock, we used the dividends on the previous document there. Common stock, we used that particular number on the statement of stockholders' equity as well. Salaries owed at the end of the year. This is also known as salaries payable because this is something that you owe. Owe means it's payable, means that it's a liability. So I want my salaries payable here. And that amount again is $2,400. What's left? Expense, that would have been income statement, and retained earnings, that would have been used to calculate my stockholders' equity items. Let's see what we have here. We didn't drop in the land. I should have. I didn't want to put it out of order. But the land that has been purchased is $21,000, and I knew I was missing something because I've got a difference here between my total assets and my total liabilities plus stockholders' equity. So the land for $21,000 gives me 33,000 in total assets, 33,000 in total liabilities plus stockholders' equity. So now when I push the check my work button, it should show me complete and correct. And that's what we have here. That is the end of the questions for the practice set for chapter 1, and that should be enough for you to be able to go and complete the homework problems because they're going to be very similar to what you find here. If you have any problems as you move to your homework, you can come back and review this again. And if you still don't get it, then by all means, send me an email and let me know where you're stuck and we'll work it out.